now let's look at some examples of the Quasimodo on the live markets. So what do we have here? This is a potential Quasimodo, right? You've got the left shoulder, you've got the head, which is a high. Now we're expecting an immediate lower low to complete the Quasimodo, break the neckline, and then retest to make the right shoulder. So let's see what happens on this particular example. As you can see, it never broke structure. We need a break of structure for it to be valid. So there's no Quasimodo here. So let's remove this to an updated setup. So let's continue with the market. Okay. Oh, okay. Now look at this. Look at the difference. You've got the left shoulder. You've got the head, which is a high. We've got a clear, convincing break of structure. So we're expecting a retest of the left shoulder to go short, right? And then we can just sell it to previous structure or the imbalances, bank levels, etc. It depends on the full analysis once it's complete. So let's see what happens on this particular example. Let's just Quasimodo, potential Quasimodo, and there we have it triggered. So this one wouldn't have hit your stop since your stop loss would be above the head, but it continued to go short. If we continue with the live markets, there's another Quasimodo. So again, we can see a left shoulder, a head. Now we've got a potential pullback, Quasimodo to the right shoulder, and then a drop to the downside. So let's see what happens. Wow, look at that drop. Look at that drop. So this was a valid Quasimodo. You've got the left shoulder, you've got the head, you've got the break of structure, and then you've got your pattern. So this is fine. We can take this Quasimodo and make sure there's a bank level. You've got the 1, 2, 3 Quasimodo, stop hunt. Stop loss can either be above here, depending on how we've redefined it on the smaller time frame. Stop losses are a completely different ballgame. Let's just focus on how the Quasimodo looks. Aggressive stop loss would be somewhere here, right? Which would have missed it. A conservative stop loss would have been above the head. I'll cover stop losses in another video, but just to give you guys an insight onto how it looks on the markets and how powerful the Quasimodo is, just giving you guys an update. Now let's continue moving with the market. So any more potential Quasimodos? This could even be classed as a Quasimodo, right? Look, we've got small left shoulder. You've got the head. Now we're expecting a potential right shoulder at this level. And we do have some equal lows. However, since there's equal lows here, obviously liquidity pools might be below. So again, it really depends on the technicals at the time. So even though, yes, it's rallied to the upside, it can still retest this left shoulder, this right shoulder. And there we have it. It's retested the right shoulder, spike below, completely invalid. Now let's look at some valid trades now. Okay, here we have another clear example of a Quasimodo. Now, the bigger the breakout, as further away than it goes from the actual neckline, and the longer it takes for the retest, these are normally high probability trades compared to an immediate Quasimodo, which is fine, it does work, but we want to trade the ones that have not been tested for a while. So this was a really big break to the downside. And obviously we can see there's a bank level right in confluence with where price could potentially go to, right? So this is the left shoulder, the head, we're expecting some form of a pullback, and a bank level to the left, right shoulder. This is a textbook Quasimodo. So as you can see how price will approach it. Again, even if it's making lower lows and lower highs, or even if it changes structure, whatever happens, it's irrelevant, completely irrelevant if you're waiting for the Quasimodo, because eventually it will retest the right shoulder, whether it's here, or in a couple of weeks, it's still going to retest it. It's smart money Quasimodo. So let's see what happens on this particular example. And as you can see, it's going to retest it. Obviously, as I've played back this, I know what's going to happen on hands. I'm not freestyling today. And now look at the rejection, perfect rejection of the perfect bank level, right? Is there in confluence with anything? Yeah, there's a bit of a pattern here. 1 tap, 2 tap, and obviously a 3rd tap. You can even redefine the entry as well if you're looking at the smaller time frames, right? Looking at the smaller time frames, this is the breaker structure. As you can see, breaker structure, which is broken down there. So you can wait for a further confirmation. So this is your plan A entry, and your plan B entry can literally just be at this bank level right there. Right, so this is the retest and this the bank level, and off we go. So again, you can literally be taking this trade, have a conservative stop loss, point of interest, stop loss above there, TP at the start of the pattern, that's a 5-hour trade. And for your redefined entry, we can have an entry at this area after the break of structure, stop loss above there, and this can be another 5-hour entry. So the entries are on average 5R, right? That's the average trades when it comes to Euro USD. However, you can take it one step further, go on the 1 minute and the 5 minute time frame, and actually capitalize on 10, 20R trades on the same setup. So let's see if we can look for that entry. Okay, it didn't let me go back in time too much, so it's fine. Let's just try the 5 minute first. Let's see if the 5 minute lets me. If not, okay, this is fine. This is fine. So do we see any potential entries now? Look at the break of structure on the 1 minute time frame, right? Break of structure was right here. This is the break of structure. Right, the reason that's the break of structure, let's follow the market, right? So we've got 1, 2, this is the new high, this is the new high, this is the new low that caused the new high. Hasn't broken it since. This is just a liquidity grab, so we're looking at this. Finally, a broke structure caused by what? This banker block. So if we do a banker block at this area, you can see right there, would have missed your pip, because remember, your entry is going to be 1.5 pips below. So what did it just say? 1 pip. So let me just do this. 1 pip would be 7877. Yep, 77. This is your entry, and 1 pip above this area. So 37. There. Would have missed a trade, but look at the difference in risk reward if you're looking at the smaller time frame. Big difference, right? Obviously, if you're going to hold this, my advice is to make sure you're banking 80% at TP1, because it's very unlikely for you to hold a trade for the whole way. I'll be completely honest with you. I've seen so many mentors out there that show you 20, 30 or 50 hours, 100 hours. And I know so many of my students that have tested their strategy, and I know that they aim for 2, 3, 4R, and the remaining is just at 0.1% of the position. So you can hold it long term, but to be realistic and transparent with you guys, always bank 80% of your position at TP1. This one trade alone, right? Where is a good exit? You know, a good exit would be, okay, we've got equal lows here, and it was a break of structure. And we can just say that this is a good exit. There's a bank level here on the 5 minute time frame. And we also have a bit of a pattern here, as you can see, or even this developed pattern, right? So we could even say this is your exit down here on the imbalance, somewhere down here. This is the perfect way to exit. Or let's just be conservative, and we just come out at this bank level, and we're using even this pattern at the time, right? Still a valid pattern, still fine. But look at the risk reward, right? This is the realistic way when it comes to trading. So we've established that, yes, if you're being conservative, you can average 5R a trade, which will hit pretty quick as well, which is pretty decent. That's 5R, 5.7R and another 5.7R. But if you're redefining the entry using the same rules and schematics, all of a sudden your trade goes to 25.4R, but I wouldn't recommend that. I'll recommend for your psychology, come out at the first relevant TP. So the first relevant TP is here. This is where you want to bank 70 or 80% of your position. And this is fine. Imagine banking 80% of your position at AR in the space of, let me see, in the space of how long did it take? Okay, there's a new high on Bitcoin, everyone. Okay, in the space of, you get triggered. So 1, 2, 3, 4 hours, 4 hours, and you just hit an AR trade. That's fantastic. And then anything else, on the trade management video, I'm going to show you how you can hold this trade and gradually scale out, move your stop loss at the right time so you can actually hold your position all the way down. The remaining 20-30% is really important. Always, always, always bank 80% of your position at TP1, because the first TPs you're generating a lot of a risk reward, massive, massive. So let's not get greedy. Aim for something down here, and then what happens if it goes here and then it just reverses and you lose out on 8R? Trust me, I've been there a million times. You don't want to be that guy. So this is an example of how you can redefine the Quasimodo, and also how you can enter the Quasimodo as a conservative approach. So massive, massive difference, but a powerful, powerful, powerful pattern. Again, another example, just a couple of hours after, actually not a couple of days, my bad, from this Quasimodo. So the first one was the left shoulder, the head, and the right shoulder, right? Now we've got the left shoulder, the head, and the right shoulder right here. Hit the imbalance, missed it by like half a pip, but your entry is going to be 1.5 pips below the bank level or the imbalance, and 1.5 pips above the actual structure. So this would have been a pretty decent trade. TP at this previous structure, a quick 3.4R in a space of 1, 2, 3, 4 hours if you look at conservative structure down here somewhere. So quick 3R in a space of just a couple of hours. Right, let's look at some other examples. So where else could price potentially reverse from? Let's look for another potential entry. Let's see what else we can find. Okay, Quasimodo, there we go. That was a Quasimodo right there. Similar schematic to what happened down here, right? So again, we've got a Quasimodo, left shoulder, the head, broke below. This is the entry, or you can redefine it and catch this entry on a really, really tight risk reward, and then we can sell it on the way down to the previous structure. So again, this is another example. Let's actually analyze it. So we've got the Quasimodo, entry would have been somewhere approximately there. Let's see. We're looking at this little banker block here, redefined on the 5-minute right there. Simple entry, simple stuff. Got the left shoulder, you've got the head, broke the neckline, retested. Is there a pattern there? Oh, I believe there is, and a boomerang. So this is definitely a valid Quasimodo. So let's delete this. So this is a valid Quasimodo. In terms of the risk reward, keeping it simple, we can just hold the trade at approximately this area. Again, the spread, always count that yourself. So let's say 5, 6, and entry 1 pip below, approximately there. And your TP, nice little TP, 5, 6R, which is fine, right? But we can redefine it. So let's redefine it. Let's remove this TP up here somewhere. If we redefine it, what can we see? So if we follow structure, this is the new high, this is the previous low. It did break structure, which is fine. Okay, it broke structure. Let's go to the 5-minute time frame. Where exactly did it break structure from? So the structure was broken by this banker block right there, as you can see. So this could be your entry. So 1 pip below 82, 42, sorry, down there, 42, and then 1 pip below there, and then 4. Oh, this is probably a loss. Let's do this properly, hold on. Yeah, we're looking at this move. Yeah, this would have been a loss. Okay, fine. That would have been a loss, which is fair enough. Now, could you avoid this loss? Yes, we potentially could avoid this loss. No. This is a fair, valid loss, because there is, in fact, a bit of a pattern that you would have spotted on the 1-minute time frame, would have triggered us in, would have gone into profit. TP would have been, the first TP would have been down here somewhere. but then it would have spiked us out. Now, which is fair enough, unless you want to be extra conservative, but I wouldn't recommend that. We need to be a bit aggressive, and we need to be aggressive. So the first entry would have been fine. Second entry would have been a loss, but this entry would have been a good little winner. Stop loss above there. And obviously a very nice conservative TP should be down there somewhere. Let's go to the 1 hour. See exactly how it played out. Yeah, it just continued going south, didn't it? Look how powerful this pattern is. See that? Powerful, 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 powerful pattern. First TP would have banked here somewhere. Entry would have been there. And you can hold this trade for a long time. I'm going to show you some trade management skills. So let's look at some other examples on the Quasimodo. This is another example of a Quasimodo. This time on the 4-hour chart. So if you're too busy to trade on the smaller time frame, then you can obviously take this Quasimodo setup on the daily, even a weekly, or the 4-hour. As you can see here, left shoulder, you've got the head, broke the neckline, retested a banker block, and then dropped back down to previous structure. So pretty decent trade. So you can come out at the previous structure, which is here. Or if you're utilizing patterns, you can implement the 1, 2, 3 tap. And obviously that just forms a completely new, larger pattern. So again, TP1 would have been here, 6R, and then potentially 7R. So it's really, really good when it comes to risk reward and the Quasimodo. So this is just an example of the Quasimodo on the 4-hour chart. You can still capitalize on 6 or even 8R, which is fantastic, right? Let's just recap. Left shoulder, you've got the head, broke the neckline, retested to the most recent smart money level, whether it's a bank level, banker block, or an imbalance or liquidity pool, stop loss above the head or the banker block. TP obviously at the previous structure. If you see a larger pattern, you might as well hold it towards the bottom level since there is liquidity here. Hence why it did reverse to the upside. So pretty decent trade. Very, very good trade. Simple Quasimodo. However, what we can do is redefine the entry on the smaller time frame. I'm talking the 1 minute, 5 minute time frame, and be able to capitalize on a way, way, way bigger risk reward. So, for example, if we add the risk reward tool, look at the difference in risk reward just by redefining the entry. 30R in one trade. Fantastic, fantastic trade. Now let's zoom in to the actual entry point to see what has happened. Right, price is going up. The bank level liquidity pool is right there. The actual bank was a banker block. And what's happened now? Price has completely melted from it. But why is that? Let's go to the 5 minute time frame. This is where the magic's at. 1 minute to the 5 minute. So the level got filled. We're following structure on the 1 minute and the 5 minute, right? Here, then here, then here, and then made a new high. So you can't see it now on the 5 minute, but on the 1 minute it's a lot clearer. I can't unfortunately go on the 1 minute since TraderView is not going to let me, but you can clearly see on the 5 minute time frame anyway. This is the most relevant high, most relevant structure. You need a clear break of structure. Look at this clear break of structure. Clear momentum break. What caused it? This banker block. And this is where your entry is at. 1 pip below the 50%, 1 pip above the banker block. Simple, simple stuff. Just waiting for a bit of confirmation. Let the market come to you. Let the market go to your banker block. Fair enough, there's a rejection, climbs a little bit higher. Wait for a shift in sentiment, a break of structure, and a retest, and you can capitalize on a fantastic, really, really massive, lucrative trade, right? Look at the risk reward. Look at that. And it just continued going lower and lower and lower and lower. And go to the 1 hour time frame. So that's a 30R trade. But again, I would not advise holding the position that long. That is really, really hard for your psychology. I can't do that. But what I can do is that I can bank 80% of my position at the most relevant area of TP, which is here, equal lows, as you can see, and a potential imbalance. And this is where I'll be banking 80% of my trade. right? 80% of my trades, especially because it's going to be easy to hold because there's bearish momentum, bearish structure break, bearish momentum, and then boom, you're out. 80% of the trades should be banked at the first TP. That first TP is 16R, right? If you're doing 1% risk, that's 16% in the space of literally less than a day. If you're doing, you know, with us, 0.2% or 0.1%, let's say you're doing 0.2%, that's the equivalent of 2.5% in one trade, which is fantastic. And the rest, once you've banked 80% of your trade, leave the rest running to where you think there's a big possibility that price could reverse from. And clearly there's a bit of a boomerang. Come out here and boom, you're out. So you've banked 80% at TP1 of 16R and the remaining 20% around here for 29.30R. So just an example, any market or any trade that you take, whether it's on a daily, you can always redefine it on the smaller time frame, but always start from the 1 minute to the 5 minute. That's where the magic is at. That is where the edge is at. That's where you can improve as a trader from being an average of a 3R a month trader to all of a sudden 10, 15R a month trader, right? It's really, really possible. Just follow these rules.